If you're self-employed, 1099, or own a small business, and you've been told that you're not going to qualify for a mortgage because you don't show enough income on your taxes, I need you to watch this entire video because that's not the whole story. Hi, I'm Bill Halick with Ace Land Mortgage. Been doing mortgages for 25 years. We're here to help you. We're licensed in a number of states. Give us a call. We'd love to take you through the entire process and help you get your mortgage situation taken care of. So, in today's video, what are we talking about? We're talking about self-employed people, business people, 1099 people, okay? Now, what happens is, I've got my 4 little dots on the board. We're going to talk about it in a minute. But so here's what happens if you're self-employed, right? Smartly, as a self-employed person, your entire accounting situation, what you're trying to do is minimize your income on the books by taking deductions and legal write-offs and all that jazz. Why? So that your net income comes down and you'll pay less in taxes. Just how it's done, right? For thousands of years. However, when you go to qualify for a mortgage, right, you've got your gross income, then you've got your expenses in the middle, then you got your net income. It's not even on the screen, it's so low, right? It's the bottom number. The bottom number is what we're gonna use in the mortgage business to qualify you. So that's a problem because let's say you make $100,000 gross. Let's say you make $5 million gross. It doesn't matter, that's your top line number, okay? Then you got your expenses. Here, if you're only showing, let's say, $100,000 or $50,000, whatever the number is, as your net income, when you go to qualify for a mortgage and you're going to use a conventional style loan, we're going to look at these numbers, the net numbers, not the gross numbers, the net numbers. And that can be detrimental because if you're taking the proper deductions, you're likely minimizing your net income, but that's now a problem for you when you go to get a mortgage. Okay, got it. So now what? Well, there's a whole thing called non-QM mortgages. They've been around for years now. It's not a new thing. We've been doing this since 2012 at this point, 2011. And what it is it all depends. So for example, for self-employed business owners, bank statements is a great product. What does it do? What we do is we take 12 months or 24 months of business bank statements, right? So depending on what month we're in, go backwards 12 months, every single month. How do you do it? What you don't do is send me pictures with your feet in the picture of screenshots with your camera of your bank statements. Please don't do that, okay? Please don't do that to any mortgage person. You're gonna ruin their day, okay? Just do us a favor, please. So what you do is you log into the bank that you do your banking with and you click on the PDF icon. I'm assuming in 2026, y'all know what a PDF is, okay? So you download the PDFs, 12 of them, 12 months, 12 bank statements, 1 year, okay? 24 if we're doing 2 years. Why would you do 2 years? You might get a slightly better interest rate on the product. That's the only reason, typically. Okay, so we're gonna take the income on the bank statements, we're gonna average it, we're gonna apply a ratio, and then you're gonna get credit for a good chunk of that money flowing through the bank statement. And then that number becomes what we would use to qualify you to pay the mortgage. And typically that number is gonna be much better, which it really is in reality, and it shows that you can afford the payment, okay? Number 2, 1099 only. Okay, so let's say you work and you're some kind of online sales and you got all kinds of online affiliate links and all that jazz, right? And all of a sudden you're getting a 1099 over here, a 1099 over here, a 1099. So you got all these 1099s, right? So what we'll do is we'll take the 1099, whether it's one big one or a bunch of little ones or a bunch of big ones, whatever. We're gonna add them together and we're gonna hedge that a little bit. And that's it. That's the number we're gonna use for your income. Okay, they're gonna apply a ratio to it again. But again, that number is usually gonna be much better than what it would be on the returns. And therefore, that's why you're not qualifying under the conventional QM loan. These are the non-QM loans. This is for, slightly more sophisticated scenario, let's say. Okay, P&L, profit and loss, not PNL, like the letter N is P and L, okay, profit and loss. What is that? Okay, what that is we'll talk to the accountant, the CPA has to be a licensed CPA or something to that effect. I think we'll do PTINs, whatever. What they're gonna do is they're going to go through the books, which they probably have access to your online QuickBooks or if you're using another system, whatever, and they're gonna put together a profit and loss for the year, 12-month profit and loss. Now, typically we may ask for bank statements that correlate, but not the whole 12 months or 24 months. They might ask for 1 or 2 or 3, right? Either way, it's a lot less stuff. We're not looking at tax returns, so we're just gonna look at that P&L. And again, we're gonna hedge it a little bit, and we're gonna use that to help you qualify, and it's gonna be typically a lot better for you as a self-employed person. And then one of the last ones, there's other ones, but this video, we're going to go over 4 of them, is asset depletion. So if you happen to have large asset reserves, okay, so you've got $1 million in the bank, but maybe your cash flow this year wasn't great and you're not qualifying because your cash flow wasn't great, but you got a huge lump of money sitting in the bank. What we'll do is we'll take the asset amount and we're going to divide it by a number of months. Certain places use more months, certain places use less months. We use a number of different underwriters, so we've got access to tons of different places, and we look for who's ever got the most favorable terms for our clients. Either way, what's happening is we're taking that money, we're dividing it by a number, and that's going to give us a monthly number. That's the number we're going to use for your income, okay? Then that's the number we're going to look at against the principal, interest, taxes, and insurance. That's going to create our debt ratio, or DTI, and assuming that those numbers are good and come in under the threshold, you're going to be approved for the loan. Now, obviously, you still need to have a decent credit score. There's other factors. These loans typically require larger down payments, right? So if you're purchasing a home, you're not going to be able to do a bank statement program that sounds like an FHA loan with 3.5% down. No. You're going to have to put down, I think we actually have it with 10% down, but it's usually 15, 20%, sometimes 25%. So these products are going to require a bit more money, a bit more skin in the game. However, if this is your only option versus nothing and not getting the property, these programs are great. I mean, these are not like bad products. These are very smart, and I think the bank statement loan is one of the best loans created because we're looking at real numbers and real historical analysis. Now, there's no guarantee of future. We all know that, but theoretically, that's why we're hedging. If we look at the cash flow, we do have some kind of an understanding of what you're going to earn as a business owner, which means we kind of have an idea of what you're earning. We know how much you're making. We can do a debt ratio and we can say, hey, you know what? This person can afford the home. Let's give them the loan. So it's actually really good that they came back out with some of these programs, because without it, there was a huge portion of people who were not being served, who surely have the ability to repay and take care of their mortgage payments. So this is a quick snippet into some of the stuff that we can do here. We've been doing it a long time. We love to help our clients save money, and we put them in the right programs and the right products. If you're self-employed and you've been turned down, give us a call here at Ace Land Mortgage. The folks here want to help. We love helping our clients. We've helped tons of people over the last many years put together these type of loans so they can qualify and they can close in their home. So if you like this information, you like this content, click subscribe, share the content. We appreciate it, and we'll see you guys in the next video. Have a good one. Bye-bye.